Your competitors are scared of you. The Morgan AI-powered Life, the king of closings. This Wednesday at 1 p.m. PST.
Welcome to The Interest. I'm Mike Savino. Data privacy and security are major issues across industries right now, with major companies like Meta, Apple, and even ESPN facing or settling massive class action lawsuits. And right here in the mortgage industry, we're looking at some major changes of our own around data privacy and rules thanks to laws in 2 states. First up in the Golden State, where the California Consumer Privacy Act is under development. The law was passed in 2020 by voters and was set to take effect on January 1st, but regulators are still making updates. Meanwhile, companies in Virginia are also adjusting to a law there based on California's act. And regulators in states like Colorado, Connecticut, and Utah are getting ready to enforce their own new sets of laws later this year. While each state has its own take, they generally protect consumers' rights to privacy, including being able to opt out of having their information shared for cross-contextual advertising. And they can have the ability to limit the disclosure of or demand corrections to their personal information. In many cases, companies in finance, including the mortgage industry, will need a better way to inventory and monitor the data that they collect. And in some states, allowing consumers to opt out of certain uses won't be enough. You'll need to get them to actually opt in. You can get a full breakdown of these new laws and what they mean for you from insider Mike MacArthur in this month's Mortgage Banker magazine, available now at mortgagebankermag.com. And while you're there, check out what fellow insider Ken Flaherty has to say about the home equity business. He says fintech companies are beating traditional lenders because of, well, their technology. I caught up with Flaherty last week. He says it's not too late to catch up.
I've always been a firm believer that service wins, and we're definitely seeing that play out.
Home equity loans may be poised for a breakout, with homeowners sitting on equity as they decide to stay put. But if your tech isn't keeping up with your competitors, you may miss out on the next boom.
Unfortunately, conventional lenders aren't making it easy or inviting for new homeowners or kind of those on the upswing.
NMP insider Ken Flaherty says traditional banks and credit unions are especially vulnerable. While they've made strides during the pandemic, they generally haven't kept up with fintech and digital lenders. And it's not just letting your borrowers apply online. You need to make sure your entire process is convenient.
Are you still requiring the age-old, you take it into a branch and have them ship it off and then have another party look at it? Or do you provide a digital hub?
Home equity loans are drawing a lot of attention, but Flaherty notes improving your process will pay off in other ways. In fact, he says you should focus on making your mortgage applications easier.
It's if you can perfect that process from the mortgage angle, that can absolutely be used on the home equity side of the business.
Tech upgrades might be the thing that makes you stand out, but you also need to make sure your borrowers understand home equity loans compared to their other options. Flaherty even suggests using a hybrid approach as an option, getting an unsecuritized loan if you need money quickly, and then refinancing with a lower interest home equity loan.
How do I know that if I don't have any education and I'm a fairly new homeowner?
You can read more from Flaherty in Mortgage Banker magazine, available now at mortgagebankermag.com. For the Mortgage News Network, I'm Mike Savino.
And if you want to see what products your competitors are using, you can get a first-hand look at Originator Tech Live, March 22nd and 23rd at the Link Hotel and Experience in Las Vegas. Originator Connect's newest conference takes 3 years of online events and brings them to life for the very first time. Understand the forces changing marketing, sales, and delivery channels, and see in-depth hands-on demonstrations of the most compelling products on the market today. Sign up now at originatortech.live and use promo code MNNFREE for free registration for yourself and up to 10 colleagues. That's a savings of $195 per person. Coming up, signs that the shortage in housing supply is only getting worse.
Morgan of SunWest Mortgage is here to change the world of loan originations forever. From sending updates to your clients to allowing you more time, you can do it all in a simple chat. You no longer have to struggle with documents. All you need to do is select the files and upload them, and they're submitted in an instant along with your loan file. With SunWest, your true home is always within.
Welcome back. Every time we think we have momentum in the housing market, something cuts our legs out from underneath us. And right now, it's housing supply continuing to keep prices high. A new report from Redfin says that total listings are still up 14.5% from a year ago, but new listings were lower than in any other month on record except for April of 2020. That's keeping prices high, and pending home sales are leveling off, even though mortgage rates fell throughout the month of January. A Redfin economist summed up the situation like this: "We took 2 steps forward in December and January, but have taken 1 step back in February. Now, mortgage rates are creeping back up, likely pushing away some of the buyers that were just starting to get back into the market. Purchase applications showed progress at the start of the year, but they've plummeted this month and are now down to their lowest levels since 1995. We'll be right back with what else is interesting today.
I don't have to be babysitting my loans. I don't have to be checking on everything. I get to spend more time with my family at the same time as I'm closing more loans. Join SunWest Mortgage and you're going to see that for yourself. It's the best experience ever, honestly.
Break free of the matrix of manual loan processing and underwriting. Use Morgan now.
Welcome back. Here's what else is interesting today. And it seems homeowners aren't the only ones benefiting from the home appreciation explosion. 12 states and the District of Columbia have laws that let local government and private lien holders take the entire value of your home if you're late or underpay on your taxes, even though the recent spike in home values means that the equity is often larger than what the owners owe on their tax bill. This is according to a new study by the Pacific Legal Foundation, which found that 8,950 homes and $860 million in value were lost from 2014 to 2021 through what it calls home equity theft. The organization is advocating for laws that protect owners from losing the entire value of their home in these situations. For more on these and all of today's top stories, go to mortgagenewsnetwork.com.